Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion, it will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there is, if you think about it, I mean, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category.
Bitcoin stands alone as the leading force in the cryptocurrency space, with Cathie Wood delivering a clear message: Bitcoin's dominance is set to continue. Wood predicts that Bitcoin will achieve a staggering $20 trillion market cap by 2027, translating to over $1 million per coin, fundamentally altering the financial landscape. Even owning a fraction of a Bitcoin could significantly impact one's life. With its fixed supply, decentralized nature, and increasing institutional adoption, Bitcoin is positioned to revolutionize the global financial system like never before. In a recent interview, Cathie Wood, the founder and CEO of ARK Invest, illuminated Bitcoin's potential to disrupt traditional financial systems and shape the future of global finance. Wood underscored the significance of Bitcoin ETFs, which currently hold approximately 4% of the total Bitcoin supply. Additionally, she highlighted the upcoming Bitcoin halving event, where the supply growth rate will plummet below 1%, potentially fueling increased demand and prices, solidifying Bitcoin's value. Stay tuned until the end of the video, where Cathie elaborates on how Bitcoin serves not only as a risk-on asset but also as a risk-off asset, providing further insights into its multifaceted role in investment strategies.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
All of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million, the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million, and the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin, and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggests to us, that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically. So the halving, so we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin, so it's quite a different dynamic. So the halving is that milestone, and if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around when they didn't even know what coin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971. The financial markets, when you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about. I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think Vanguard is doing, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. But we think it's a new asset class, and they will be depriving its clients of access to a new asset class, which, if there continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So, I think there will become, even for the Vanguard ecosystem, a demand pull. One thing I will say, right now, no wirehouse, so whether we're talking about Morgan Stanley or Merrill Lynch, B of A, UBS, or Wells Fargo, no plan has approved Bitcoin yet. So all of this price action happened before they approved. And so, we haven't even begun with our new expectations for institutional involvement. The incremental price that we assume for institutions actually has more than doubled. So, I don't want to give out any particular prices, but because we don't know how quickly the more independent registered investment advisors in the United States, those platforms are saying, give us 3 months to do our due diligence. The others are saying we need at least 6 months. So, I would put those in the institutional bucket as well. If a country's currency is going down, but Bitcoin's going up, that's a huge hedge. It's going to protect them against that eventuality, because what usually happens is the IMF comes in and basically tells them, we want you to increase your taxes, cut your spending, we're going to regulate you more, and it would be 180 degrees against what I would recommend. But that's the IMF prescription. So to protect against that, Bitcoin would be a very good hedge.
Cathie Wood predicts a monumental rise for Bitcoin, projecting its market cap to soar to $20 trillion in the coming years, which would value a single Bitcoin at over $1 million. This forecast implies that even owning 0.1 Bitcoin could be life-changing. Wood attributes this surge to increasing institutional recognition of Bitcoin's benefits, which drives investment and boosts its acceptance. With growing institutional adoption and improving regulatory clarity, Bitcoin is poised to play a significant role in investment portfolios and global financial transactions. Bitcoin's versatility as a store of value, hedge against inflation, and medium of exchange positions it as a transformative force in the future of finance, shaping investment strategies and financial transactions worldwide. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.